Welcome to a special series called The Global Crisis Monitor, featured on the Treasury Update podcast. Thank you for joining.
Host Alexa Cook catches up with Craig Jeffery of Strategic Treasurer on Period 16's results from the COVID-19 Impact and Response Survey. This monthly update centers around the steady improvement of organizational liquidity, escalating of cyber fraud, changes to top concerns, and the current outlook on health and the economy. Listen in to learn the major factors impacting Treasury and finance organizations today. So this week, we're now 16 survey periods into our Global Recovery Monitor. And Craig, maybe you want to start us off with some of the headlines.
Yeah, so now we're well over half a year into the Global Recovery Monitor. Here's just a few of the top items. So organizational liquidity position is again very strong. This is, once we got past the first month or so, we've done pretty well. So we've got about a 14 good period run here. Significant improvement, a net 23% of organizations noting an improvement over the prior period. So liquidity seems good. We asked questions about industry, GDP, overall economic growth, their industry, their individual company. On the industry, Q1, the outlook for Q1 2021 has improved since last month's monitor. So that's some of the growing optimism. And they're expecting growth over Q4. Not massive growth over the quarter we're currently in, but growth nonetheless. Q2 is quite positive. So that's, on the industry look, on an overall basis, it's positive. GDP growth in the home country, Q1 grows over Q4. Q2 indicates significant expansion and I would say positivity or positive thoughts. So we've got industry and overall GDP positive indicators there. I know I've got a lot here, but just about 50% of respondents expect their company or organization to do better than their industry. So it's about 50% versus 40% of those who expect their company to match the industry in terms of performance. So quite a positive outlook on what companies and organizations are doing to adapt. That's pretty notable. As we look at industry, country level, company level activities. And finally, the other headline to share is bad news. It's about cyber fraud. Again, it's increased during COVID. So people are seeing a continued escalation. So it's escalated every time we've tracked it. It's gone up a more significant level. And so, we're at over 45% indicated an increase in cyber fraud attempts. So a bunch of positive news and then some negative news.
That really kind of ties into the title, which is Optimism and Concerns. And I'll even add a quick economic highlight there too, since I normally do. So both our 3-month and 12-month outlook have shifted. And the 3-month outlook has really shifted again and is just over 3 months until the equilibrium. And in the past few periods, this marker has really teetered a bit, but this period's response has really been the best that we've seen so far. So that's really a good indicator for the economy. So what about any comments on the staffing in general, since I know that's some concerns that we've seen?
Yeah, we've asked questions about staffing a number of times, and I know we've had these conversations before. It's still negative. It's still a net negative on the industry. So we asked the questions about what's the staffing going to look like in your industry before the end of the year. It's still negative. It's still significantly negative, but let me say it this way, it's notably less pessimistic. So it's not as bad as it's been the last 2 periods. So over the last 2 months, people haven't been as pessimistic about that time frame.
What are some of the changes that we've seen to the top concerns from the prior period?
Oh yeah, this one we asked 2 sets of forced rank concerns. One of the ones that's been at the top all the time is the direct financial impact of the business. That's always at or near the top, and that's clearly the leading concern by a larger margin than we've seen recently. Maybe in the time over the as the monitor's been running, but we'll look at that in the report and let everybody know if that's the case. Number 2 is recessions in the regions that we operate in was the second concern. And there was a pretty big gap between those two. There was a pretty big gap, from the two leaders to the next level. And staff safety protocols receded once again. That's come up a couple different times. But there was a significant gap between all the rest of those forced rank concerns. The other forced ranking concern we had, where there's 8 choices, elections was top this time. And with the elections looming in early November in the U.S., it's not far away, and it's moved to number 1. It was second the last 2 months, and then it was third the month before that. So that was the top concern in this period. And then COVID response impact dropped to number 2 the last couple times it was 1. Civil unrest in North America sits at 3. It's a really high level concern. It's been number 2 or number 3 for a quarter of a year now. Then there was a gap between those 3 and the COVID death rate. That's the 4th top concern. That rounds out the top half of those forced ranking concerns. But you've been asking me questions, and we're missing Meredith today, but I'll ask you. You usually cover the estimates for health, financial normalcy, peak death rate. Maybe you could give us what do the timeframes look like for those now?
Yeah, so the inflection point has pulled back a bit from the prior period, which is now coming in at about 4 months. So that's a little bit of a good sign. And then the peak death rate is now just at over 4 months. So that is a slight increase from the prior period, which was at about between 2 and 3 months in the last month. So that's not great, since that did push out a bit. And then for the health outlook, the extension of time until COVID-19 becomes a minor health issue has stayed consistent at the 11-month range. I think that's stayed consistent for a couple of periods now, so that's not terribly surprising. And then for financial normalcy in individual businesses, this is coming in at about 10 to 10 and a half months, which is actually an improvement from the prior periods. If you recall, the last 12 weeks of the monitor, we were really stagnant at about 11 months for this financial normalcy in individual businesses. So this is really great to see a slight improvement here.
That's really interesting just to see how that's pulled back a little bit. But as we looked at all of these, I'll call it financial or economic measures about your company, the overall economy, your industry, et cetera. So this reaching financial normalcy of 10 to 10 and a half months, which is the longest of all of those indicators, that means that we're just over 3 months for the economy, to 10 and a half months when people look at their individual companies. So it's interesting to see that range. So thanks for sharing that.
So then, Craig, each period, Meredith typically asks us about AR and fiscal policy. So were there any changes or negative or positive outlooks here?
AR was negative, and that's typically been the most negative during this long run that we've had of looking at the impacts to liquidity. So AR was negative, but it was trounced mightily by fiscal policy actions and inactions. And you can think certainly a number of respondents were from the U.S. and less action or arguing about whether there's going to be some additional help. And I think the expectations are that that's certainly through some of the time periods that it'll get pushed past the election before there might be any assistance there. So that was the most negative and substantially more negative than AR. It was a net negative 20%. So that was the big change this time.
So now, before we wrap up the episode, what do we need to be thinking about for the weeks ahead in the next survey period?
One new question that we're cycling in has to do with what's happened with voluntary staff leaves. Who's been leaving? Is that an experience in your organization or not? And then is it more centered on men or women, or is it equal? This is one of those concerns that came up, was noted in one of the freeform responses, that they were concerned about. I think it was identified as the number of women leaving the workforce. And we wanted to see, what's happening. I mean, kids are home, people may be sick. What's happening to support this? So that's one of the things that we're asking about that I think we should all look at. But I think, we're seeing this multiple periods of growing positive view of liquidity and a shortening of when we're going to reach financial normalcy. So I want to see if that continues, because we've seen that, get very rosy, pull back a bit, and then, then improve. Let's see if it sticks again, and if we have a full quarter on some of these measures, or more than 5 months of improvements.
That's great, Craig. Well, thanks for joining me today to go through this period survey results, and we'll talk next month.
Sounds good. So those who are listening, take the Global Recovery Monitor survey. It takes about 5 minutes. You can find it at treasurycoalition.com and click through, and you can take it every month. So please invest 5 minutes.
Thanks, everyone.
We wanted to encourage you to take the Global Crisis Monitor survey repeatedly while it's live. It runs from Wednesday to Tuesday every week. You can go to treasurycoalition.com and follow the links. Add your voice and insight so that as a profession, we can take positive and knowledgeable steps to move our organizations and nations forward. Invest 5 minutes each week at treasurycoalition.com and get great information and insights while helping our profession and organizations.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.